All right. Good evening, everyone. This is Danisco FX. Once again, I'm back again. I'm still working on the course because there's a lot of updates in this course. The sniper trading strategy. I've done some modifications of some certain things. So I want to quickly run you guys about the top-down analysis. About the top-down analysis, how to do top-down analysis using my same strategy the way I trade. So this is the slide first. So this is how to do top-down analysis. Though I will drop other video, the full course video will be out very soon. I'm still working on it. So please practice this, put this in practice. I will not come and force you to do it, neither will I force you to do assignment. But if you see that it's good for you to do assignment and send your screenshot to the group so that I can tell you when you are wrong and when you are right, it's good for you. That is how I learned. You understand? So I will not force you. That is it. So this is the first thing, the top-down analysis, the snipers trading strategy, top-down analysis. So the first thing to do, the number one thing to do is to identify your higher time frame direction. That is your breakout structure. This BOS means breakout structure on the higher time frame, right? So now you have identified your breakout structure. Your higher time frame, is the market doing higher high and higher low, or lower high and lower high? You understand? So now we have identified our direction now, that this market is on a uptrend. So we are looking for buys, right? So this is a uptrend. So we'll move number two. We'll identify the range, which is the swing point and other things, which is still on the higher time frame, which is that will be either your daily time frame, your 4-hour time frame, or your weekly, or any type of trader you are. So you can start from either 1 hour time frame, but from 1 hour time frame, 4 hour, daily time frame and up. So now this is your range. Now this is your range. This, remember, this was your structure. So is this range that you are going to trade from? This range, this is where you are going to trade from. This range here, that is where you are going to trade from. So this was your breakout structure, right, to the upside, right? So this is your range. So this is where you are going to trade from. That is where you are going to trade from. So let me delete it. That is where you are going to trade from. So now that is number two. Then number three, identify your momentum. Where is your momentum? I know this will be a little bit confusing. What I mean by momentum is that, look at this correction here. If you look at this correction here, see that the market is correcting in a corrective way, like it's making lower low, higher low, lower low, higher low, lower low, higher low. You understand? The market is just doing something like this and come into the your higher time frame point of interest. So this, you identify this on the 15 minutes time frame. You will see how the market is correcting from the 15 minutes time frame. This is the page setup now. And it's creating a liquidity zone, creating a liquidity tool here. Understand? So when you see market moving in a corrective way, this is the good one, not the one you see something like this, something like this. You just come and tap into your other block very sharp. This might even end you in loss sometimes. Sometimes it will go your way. So that is what I mean by momentum. Just the way how how the move is moving. That is what I mean momentum. So let's go down to the next slide. So you identify your premium and discounts of the range. Sorry, I did not put. So look for the sales set up at premium pricing and look for buy set up at discount pricing. What that means that if you look at here, this is a premium and this is the discount level. You should not any your point of interest should be somewhere here. You will look for buy from this side. Then if your market was in a downtrend, you look for a sales from when it taps into this particular side, then you look for a sales, right? When the market taps in here, you look for your sales. So when it taps in here, you look for buys. So that is what I mean premium and discount. So you buy something on a discount price, right? When like normally, if now a bag of rice is 2,000 naira, you rush and go and buy in that place of 2,000 so that you come and sell at the rate of 80,000 now, right? So that is clearly what I mean premium and discounts. You buy it at a low price and sell it at a high price. So this, you use your Fibonacci retracements to do this, and your 50% of Fibonacci retracements will be your premium and discounts. 50% of your Fibonacci, though I will still do a video on how you should configure your Fibonacci retracements to be like this, so this is the 50%, this is the 50%, this is the 0, and this is the 1. You understand? So that is it. You look for your premium and discount. So after you have looked for your premium and discount level, now you move to your, so identify your point of interest. That is your order block or supply and demand zone. Anyone is still the same thing, it's just the name. So now you have identified your point of interest, which is, this is my point of interest on the higher time frame. I was waiting throughout the week, throughout the days, for this market to come back to my point of interest, right? Remember there was an imbalance here, a fair value gap. So anything, this is where you look for your buys and this is where you look for your sells. So now the market has broken structure successfully and the market has tapped into a higher time frame point of interest. This is a higher time frame point of interest. This is 4-hour point of interest. So when the market taps into your 4-hour time frame, then you move down to your lower time frame. This is a lower time frame. Wait for the structure to change and execute. Look for entry models at your point of interest. What that means is you look for your entry points here at this particular level, at this particular point of interest, which is your 4-hour point of interest. So this is the first entry model that you have. That I have two types of entry. I have the risk entry and I also have the confirmation entry. So the risk entry is when the market give you first break of structure to the upside, which is other people call this change of character. Then you look for entry here. Why confirmation entry is that you wait for this, for the first break of structure, an impulse that breaks structure, successful retrace, then a break of structure, successful retrace that broke a structure. Don't know if you understand what I'm saying. Let me go back again. That means I'm saying that an impulse that broke structure, successful retrace, that broke a structure, right? So this is the impulse that broke this structure, successful reaches that broke a structure. So this is the confirmation entry. So this is the risk entry number 1, and this is the confirmation entry number 2. So you choose any one you want to use for your entry. That is on the lower time frame. So let me still explain about that entry pattern. So this is our entry pattern, the two types of entry pattern that I have, that I learned from my mentor. Is this is the first break of structure, an impulse that broke structure, successful retrace that broke a structure, then you look for entry. The same thing here. This is the lower time frame. This one here don't grab liquidity, but if you look at this one grab liquidity. You take out this low first. Remember, this market was in a downtrend. It was in a downtrend, and it take out liquidity, grab liquidity, then broke this structure, then successful retrace that broke a structure. Then you look for your entry pattern, or you look for entry pattern at number 1 or number 2. So that is how you look for your entry pattern. When you see liquidity grab and break a structure, then you look out for this. So this will show you that the trend has changed. You look for buys. So this one you look for sells. The same thing here. The market was in a uptrend, and the trend change, take out liquidity, break structure, and successful reaches that broke a structure. Also, your confirmation entry, you have an entry here. All this will happen on the lower time frame, which is your 15 minutes time frame, your 1 minute, 5 minutes, and it also happen on the higher time frame. It depends on the type of trader you are. So let's quickly go into the chart and look at how we can use this to have a good entry on our charts. Okay, so this is our chart right now. This is our chart, and this is the 4-hour time frame. This is the 4-hour time frame. This is the 4-hour time frame. So if you look at this was our breakout structure. Let me delete this and put it again. This was the first breakout structure. Sorry. Oh my god, what's the problem? Okay, this is the first breakout structure to the upside, which tell us that the trend is in the uptrend, right? And we mark out our high and low. We mark out our high and low, which is this is the range. This is the range. This is the low. So sometimes you see me write H4 high and H4 low, but this is the range. This is where you will target, your overall target will be. Then you identify your point of interest, which is your order block, and this order block comes with an imbalance. This is an imbalance here. Imbalance created a liquidity zone. This is a liquidity, and you see this market came back to this level and grab liquidity here, and come down. Since then it has come down and tap into your order block. So when the market taps into your point of interest, then you move down to the lower time frame, which is your 15 minutes time frame. Mm. So this is the 15 minutes time frame now. So let's wait for the charts to load. Okay, this is the 15 minutes time frame now. This is our point of interest now on the 15 minutes time frame, so that we'll have that tight stop loss that we always want and have a good risk to reward, right? You have to wait for your confirmation, very very important. So looking at the charts now, see the market was coming down. On the lower time frame it was a downtrend, and the market came and created this high and and retraced back and tap into this particular other block here and went up. So when it went up, when it went up when it went up when it went up when the market went up, break the structure, impulse that broke structure, successful reaches that broke a structure. So this is the successful reaches that broke a structure, and this was our entry. Your entry will be here. Then your stop loss, give room for your stop loss, because you don't know what will happen. The stop loss of this was around, is it 8 pips or 10 pips, and this will be your entry. So let's go to the 5 minutes time frame, so that maybe the structure will be more clearer on the 5 minutes time frame. Let's go to the 5 minutes time frame. To the 5 minutes time frame. Okay, I think my plan has not reached this side. I have not subscribed. So I have not subscribed, so that is why it's not showing up to that point. It's not showing, but that is just how let's go. So this was, remember, my breakout structure is not always the wick, it's always the body of the candle. So this was the breakout structure. To the upside, successful reaches that broke a structure. Then you look for your entry here. Then for risk entry, your risk entry could have been this particular level, which is this particular tapping that comes here. This that could have been your risk entry. So this is where, sorry, buy, you put your entry here, your stop loss below this level, because you don't know what will happen. So 7 pip stop loss is good, even if it's 15 pip stop loss. Then your target will be the 4-hour high. So here will be your target. This 4-hour high will be your target. The target will be this 4-hour high, and this will give you 1:24. risk to reward. So imagine having 1:24. If you have patience to hold it straight till TP, because that is another thing too, to have patience to hold a trade till TP. So that is how you do your top down analysis successfully, step by step. Step by step, that is how you do your top down analysis. We'll meet tomorrow. I don't know if you guys will be online. Tomorrow we should have a class tomorrow. So if you have any question, you will drop in the group. I'll answer your question. Take care of yourself. Enjoy yourself.